Well, meanwhile, some signs investors are becoming somewhat indifferent to the threat of tariffs from the US president. Asian shares rise this Thursday, even as Donald Trump launches a new assault on imports with a 50% tax on copper imports set to start next month. A number of countries, however, are still waiting to get their letters on the Trump tariff rates. In the meantime, let's cross to Chief Analyst at GTC, Jameel Ahmad. Jameel, more Trump tariff letters being sent out. Overall, how are the markets reacting?
So when we spoke 48 hours ago, we saw just over, it was 12 to 14 letters at that time had been sent out. And now, as we're speaking today, we've had 20 different letters to different trading partners about which their tariff rates will stand as of August the 1st. But some of the biggest tariff rates have been on Brazil, which was not through a letter, that was a 50% tariff, and also an unexpected tariff on copper at 50%, which pushed copper to its best one-day performance since 1989. But you're right that markets are kind of taking it in their stride. You've got financial markets in the US at least looking towards new record highs in some places. That's because financial markets are kind of seeing this as a final negotiation push from the Trump administration. Having said that, we're still seeing some more weakness in the US dollar, although it's a little bit gradual. We had the worst first half performance in the US dollar in around 50 years. And it does look like that trend set to continue. And until now, and the end of the week, we're looking at more letters being posted on social media and how different economies are going to respond into the next trading week.
Meanwhile, the minutes were leaked from something called the Federal Open Markets Committee. Jameel, what does that mean?
So the Federal Reserve, which the US Central Bank, had its decision last month where they kept interest rates unchanged as they have done since December of last year. And essentially the minutes, it's the statement following what happened at that meeting. So what we saw from different Federal Reserve, again, US Central Bank policymakers, they're indicating the interest rates in the US will continue to go lower and resume interest rate cuts later in 2025. But that's somewhat stuck in the mud, because they're waiting to see what impact the tariffs can have on the real US economy, US economic data, including inflation, what impact that's going to have on consumers. And the biggest crystal ball moment has been is that although these tariffs continue to be threatened, we haven't yet seen what impact it's having on the US economy. But we're expecting to start seeing that over the second half of the trading year. Though at the moment, inflation doesn't seem to be picking up, and it does seem that Fed policymakers are looking to cut interest rates over the second half of this year. And of course, they're coming under political pressure from the US president, who's demanding interest rate cuts immediately. And he's been a lot of pressure, particularly on the Fed chair, Jerome Powell, who is saying he should resign. At the moment, the Fed are not bucking to such pressure. However, it does not help when the US president has put so much public pressure on the US Central Bank.
Finally, Jameel, we're expecting some important data for the UK economy.
We are looking at a number of different UK economic metrics over the remainder of the trading week. Also going to be looking at Bitcoin that hit new record high only yesterday. And then heading into next week, we've got a number of inflation data. But at the moment, we're probably going to see more sentiment dictated by these trade letters that are being published on socials.
Chief Analyst